Hello everyone. Let's start our paper today. We have our 9th set of paper, LCCI Financial Accounting, June year 2019. Okay, again, 100 marks, 5 compulsory questions. Okay, if you have been working with us on these papers, you will find that we are taking less and less time on each paper. So let's start. First question, extended trial balance. You can see we have some adjustment to the inventory and then other items as well. Okay, and then we have to calculate inventory, the value of inventory, trade receivable, change in the allowance for doubtful debt, and then 13 marks for the extended trial balance, 20 in total. Okay, let me type the question details first. Okay, so let's start inventory, receivables, and then allowance for doubtful debts. So Dora provided the following information in addition to the extended trial balance provided. Closing inventory was valued at 18295 and included 2 damaged items, Delta and Echo. Quantity given to you, the cost and the selling price, usual selling price, but then we don't need it. We need the new net realizable value. Delta could be sold at 9 per unit after repairs costing 0.5, so it would be 9 minus 0.5 and it would be 8.5. No impairment, no adjustment needed. And then next one, Echo, 140 items, 13, and could be sold at 12 per unit after repairs cost of $2. That means 12 minus 2. The net realizable value is 10, and then there's impairment of $3 per unit. So 3 multiplied by 140, and that gives you 420 impairment. Okay, so here we have 2 minus 420. So 18295 minus 420, we have 17875. That will be the answer for part 1. Okay, let us scan through the other parts to see. Yes, there's no other items regarding inventory, 17875. Okay, here 2 marks, so you need to show the workings as well. 17875. Okay, minus 420. Okay, originally it is 18295. Okay, so here we would enter into the extended trial balance immediately. Statement of financial position, debit, credit for profit or loss, 17875. Okay, so finish item 1. Let us go on to the next item. Credit sales for the month of April had not been recorded. Okay, that would change your trade receivables as well. Discount allowed had been debited to trade receivables. No other entries have been made. Okay, so we do it one by one. We skip part A first because it would be for later. So credit sales 17200 not recorded. Credit sales So it would go to sales revenue 17200. Okay, and then 17200 here. Okay, next. Okay, maybe I do not enter yet. Should I? Okay, let's do it like this for now. Okay, because I want to show you the effects of each item in the extended trial balance, and then we will make an overall change to the trial balance later. Okay, next one, discount allowed 2560. Okay, it should be credited to trade receivables, but then it had been debited, it had been added to it. Okay, but then we should reduce. No other entries have been made, so we have to put back the amount in the discount allowed account. Let's see. Discount allowed, where is it? Discount, I can only see discount allowed is down there. Okay, 2560. Okay, that is debit because it is an expense, and then we should credit here. Okay, but then what we have done is we have debited once, so we have to do double in order to cancel the error and then put it back in the correct position. Okay, and we also have to debit suspense to make it balance. Okay, I will use another color so that you see clearly. Okay, 5120 2560, and then the suspense. Okay, next. Finish 1, 2, 3. Irrecoverable debt 1390 were to be written off. Okay, so this one is simpler. Okay, here you can see we have already have a debit balance here, I mean credit entry here. Okay, so when we need to add 1390 here. Okay, so 1390 irrecoverable debt 1390, 5120 and 1390. We have 6510. We may still need to adjust, okay, but then we look at it later. Allowance for doubtful debt was to be maintained at 5%. Okay, you see we don't have any other item related to trade receivables, so we can finish it now. 5% trade receivables. Trade receivables, now the balance is 12410 plus this one minus 6510. We have 39100 for the trade receivables. 5%, it would be 1955. Okay, 1955. We compare to the opening balance 1920. There is a $35 increase. Okay, allowance is in the credit side, so if you want to increase, it would be crediting. Allowance for doubtful debt adjustment will be 35. Okay, next. Next item. The cost of delivering goods to customer 80 have been entered into carriage inwards. Okay, cost of delivering goods to customer would be in carriage outwards. So carriage out treated as carriage in. And then we have a bank loan interest for April owing. Okay, so we'll do these two items together. Carriage in, how much? 80. Okay, carriage in. Okay, both debit. Okay, carriage out treated as carriage in. So we have to take it from carriage in, put it back to carriage out. Okay, and then we look at the bank loan interest. Okay, bank interest we have here 22,000. Let us check. 8% bank loan of 30,000. That would give 24,000 in total for interest. Okay, and that would be 1 year. Okay, and you can see if we divide it by 12, it would be 200 per month. And then we look at here. Okay, it is 2,200. That means 200 more, okay, will be for the accruals of bank interest. Bank interest is in the debit side, so if we want to add, 200 in the debit side, and then it is your accrual, so it goes into your other payables, 200. Okay, so we finished the extended trial balance. What we need to do is fill in what we have in the previous page about trade receivables and also allowance for doubtful debt. Okay, so you can see 3 marks, 2 marks, so we need to show the adjustment. Originally, your trade receivable 28410. Okay, 28410. You have to put in the omitted sales. Okay, and then you have to put back the two things. Okay, that is the discount allowed adjustment 5120 as well as the irrecoverable debt 1390. We have already calculated, but then anyway we will do it again. Plus 17200 5120 1390. Okay, as checking 39100. 3 marks. Change in the allowance for doubtful debt. Okay, we have this one multiplied by 5%, is it? Okay, is equal to 1955 minus 1920, the opening. Okay, the change is 35. Again, we have calculated already. Okay, if you are not afraid of losing step marks, then you can simply put the answer in this place. Okay, in the answer key, it allows you to just show the answer. Okay, but then if it is correct, then good, you can score the whole thing. But then if you have mistakes in some parts and you show workings, then you will be awarded marks for the correct parts. Okay, so I always prefer to show workings if there is more than 1 mark given. Okay, so 35, I always also prefer to give the sign, okay, whether it is an increase or decrease. Okay, increase in allowance for doubtful debt. Okay, so we finished question 1. Question 2. No, we still have something to deal with. Okay, because in this place you are asked to work on the value of trade receivables in part A. So you should do one thing, okay, because part B follow part A. Okay, that is you find the difference. Okay, 39100 and the difference Okay, 39100 to 8410. Okay, the difference is 10690. Okay, added to it. Okay, increase. Okay, that's why in your extended trial balance, instead of putting all the individual adjustments, okay, you can also do this. Okay, 10690 being the net adjustment to trade receivable. So you may, okay, I'm not going to, cancel all the things, but I will use orange to show you. Okay, here instead of writing it in debit and credit, the individual adjustment, I can simply put 10690 here as the net adjustment to trade receivables, and that is suggested by the answer key, by the mark scheme, okay, and given you 1 mark. Okay, but for me, I would always prefer to show the individual items, because when you work on the extended trial balance, okay, when you are actually working on it, okay, you have to show the double entry. Okay, and it is a better way to do that. Okay, anyway, I'll show you both ways and you have to choose. Next question, it is about depreciation and non-current asset. So I would simply classify it as depreciation. Okay, so let's see. We are provided the following non-current asset register for the year ended 31st May year 2019. We have vehicle A, B, and C. Okay, given to you the acquisition date, the cost, the accumulated, the depreciation charge for each year, okay, and any other related items. Okay, so you can see vehicle A, it continue to exist. Vehicle B has been disposed. Okay, and this is the disposed proceeds. Okay, disposal day. Oh, we have to see, okay, what is given to us later. Okay, because for vehicle C, it is of the trade-in allowance. Yeah, I guess it is the disposal. Okay, and bank. Okay, and funding method for vehicle A, bank, and then bank loan. Very interesting. Special way to give you the details. Depreciation charge is for 20% per annum using reducing balance method. Full year depreciation in the year of acquisition, none in the year of disposal. Okay. We are in year 2019. Okay. 31st May. Good. So let's see what we need to do. State one reason why each of the following stakeholders may be interested in the financial statement of a business. Okay, so the bank will be interested because they want to know, okay, if the business are able to repay the loan lent. Supplier, okay, so they are the supplier, that means we are the customer. They want to know if the business are able to settle their accounts for credit purchases. Okay, next, okay, we have filled in the blanks for accounting. Very interesting. Complete the following sentence. If a business is a going concern, what assets are shown in the statement of financial position at what value? Okay, so here we have non-current assets were shown in the financial position at carrying value. Okay, so you know it already. You should know it already. Okay, and then we have to prepare the disposal account for vehicle B. Okay, so let us draw the account first. Year 2019, I guess. It is disposed of in the 1st of January, if I remember correctly. Okay, let's see. Yes, 1st of January, 7,500. And we have to calculate one thing first. Okay, the cost 26,000, and then the accumulated depreciation 26,000 minus 13312. Okay, that is the accumulated depreciation to be 12688. Let us confirm by adding these previous year depreciation. 12628. Okay, yes, 12688 to 26,000 as the cost. Okay, so let's see. 1st of January. Okay, is it motor vehicles? Motor vehicles. Okay, they would like to put cost here as well. Okay, as you can see in some other papers. Okay, and then the accumulated depreciation. Okay, motor vehicles allowance for depreciation. Okay, and then next one is the 7,500 proceeds. Okay, this time it is used as a trade-in allowance, so it will go to the motor vehicle account to add to the cost of the new vehicle. Okay, if not, if you are selling it for cash, then it will be banked. You are making a disposal loss 5812. 31st May would be your year-end balance. Okay, so it would be what statement of profit or loss? Okay, finish these 5 marks. Next, calculate the total depreciation charge for the vehicles for the year ended 31st May. Okay, 2 marks. Here, that means you have to continue to depreciate vehicle A and then provide depreciation for vehicle C. We use the carrying value multiplied by 20%, 10240, 20% being 2048, 18400, and then 20%, 18400, 20%, 3680. Five, 7, 2, 8. Okay, next, motor vehicle accumulated depreciation account. Okay, I see you. Because of this account name given, we have to go back to change what it is in the disposal account. Let me draw the lines first. Okay, accumulated depreciation account. So here here I have to change. Accumulated depreciation account, motor vehicle accumulated depreciation. Okay, and you can see disposal account, so we will follow, okay, strictly follow what is the name of the account. Okay, so year 2018, we will have to work from the start. Okay, so 1st of June, we will have the opening balance. Okay, we'll have to work out the opening balance. Okay, and then let me write all the items needed first. Okay, next one, you will have year 2019, 1st of January, because you have to transfer to the disposal account an amount. Okay, and then at the end of the year, okay, 31st May, depreciation expense. Okay, and also you have balance brought, balance carried down. 1st of June, year 2019, the balance brought down. Okay, so this is the concept, and then we have to fill in all the information that we already have. First of all, here, the disposal of the vehicle. Okay, for this, we will have to take 12688 from the accumulated depreciation account. Okay, and also we have calculated the depreciation for the current year, 5728. So we put these two amounts first, 5728, and then disposal 12688. Okay, so what we still need is the opening balance. Let us see. Opening balance of accumulated depreciation. We have already calculated that of we have it already. Okay, so we have already calculated the accumulated depreciation at year start for vehicle A, 2048. Okay, and then the total depreciation for vehicle B. So 12688 2048. Okay, it would be total, it would be 14736. Okay, the total of these two. This is the total accumulated depreciation at the start of the year. Okay, so we put the figures. 147. Let me check. Accumulated depreciation. Oh, no. Okay, I almost got incorrect. Okay, because I have been thinking, why is it so small? Okay, so this is the 4th year. Here is the accumulated depreciation. So let me erase. Okay, here we have to calculate first. Okay, two ways to do this. Okay, either I do it by deducting 20,000 by the total carrying value, giving you 9760, or I add these three, 4,000, 3200, 2560, okay, 9760. Usually I would use both, okay, to make sure I am correct in my calculation. Okay, so in total we have 22448. This is the correct amount, 22448. Okay, so 22448, and then add 5728 minus 12688, it will be 15488. Okay, finish. 5 marks. Explain the application of accruals concept when depreciating non-current asset. Okay, so accruals concept requires you to record an expense when incurred. Okay, not when paid. So when it applies to depreciation and non-current asset, okay, we pay for non-current asset when we purchase it, but then we do not use it right away. Okay, we'll use it for many years. Okay, so use for more than 1 year. So we have to spread the cost of the non-current asset throughout its useful life. Okay, that is why it applies the accruals concept. Okay, apart from the accruals concept, it also applies, for non-current asset, it also applies the going concern, just like in the first part, the fill in the blanks part. Also applies the consistency concept, where you use one depreciation method through different years and for similar items, right? Okay, so you may also apply the prudence concept, okay, where if you have impairment of non-current asset, you have to write off. Okay, it also applies the historic cost concept. Okay, that is, it will be recorded according to the amount of purchase price. Okay, and to ignore any fluctuations, especially the increase in the value. Okay, except if it is land and property, okay, and you find those experts to help you revalue. Okay, you cannot just do it anyhow. So next part, state 2 other accounting concepts when, okay, so we have already mentioned it. So consistency and also prudence. Okay, the most popular one. Okay, so this is regarding depreciation. Okay, just now I said for example, going concern or historic cost. Okay, these apply to the recording of the value of the non-current asset. Okay, and there is, a difference. Okay, so next one. Next question. Partnership. So let's read the question and see what have been given to us. Papa and Romeo were in partnership, preparing accounts to 31st May each year. The partners decided to change the accounting year and the accounting year end date to 31st December. The partnership agreement provided for profits and losses shared equally, 12% interest on total drawings, 8% interest on opening capital account balances. Opening, okay, we have to be careful. Annual salary, 43200 for Romeo. At 1st of April, okay, so this is the opening balance. Profit for the period ended was 1 64200 monthly drawings 2,000 for Papa Romeo 3,000. Okay, and we have 9 months to the 30th of December, 31st December. Okay, 9 months. At 31st December, we have the following balances. Bank, okay, there is a credit balance. Cash, inventory, land and buildings, plant and equipment carrying value, trade and other payables and receivables. Non-current asset, revalued. Okay. So, yes, then we'll have depreciation. Okay. Revaluation of, because there's change in the partnership, then we can also do revaluation as well. Okay, but then again, it is not just done anyhow. You have to find someone, okay, that is certified to do it. State 2 principle of professional ethics. Okay, so it is the first time, okay, in these 9 sets of paper that we see professional ethics. I don't remember seeing it in the other papers. Okay, so professional ethics. Okay, there are a few that is included in the specification. Okay, we just use 2 of them. Okay, I always like to write integrity. Okay, it's very important. Okay, and then objectivity. Okay, you have to remain objective. Okay, and objective is independence. Okay, so apart from this, okay, another one is some item that I like as well. I would say this professional competence and due care. Okay, you have to know the stuff. Okay, you have to be updated on the latest changes in the professions. Okay, and also another very important ethic, okay, would be confidentiality. Okay, so if we have these 4, then it would be quite enough. Okay, next, prepare the appropriation account for the 9-month period ended 31st December. Okay, 9 months. Remember, for everything we have to pay attention to the months involved. Okay, so we have net profit. Okay, let me see what else we have to do as well, because I'm very concerned with the revaluation. Yes, we have to do the revaluation account. Okay, why am I concerned? Because this revaluation can be done before the appropriations. Okay, because sometimes we can use the revaluation method as a depreciation method. Okay, we are not told whether this net profit is before or after depreciation, but if it says net profit, it should be after. Okay, so any revaluation, okay, might be done after the change, at the change of the partnership. Okay, so if you have the revaluation account here, then I would be very I would not be concerned about what I am concerning just now. Okay, and the capital account of Romeo, current account of Papa. Okay, so let us start. Net profit. Okay, I will write all the things first. Okay, and then appropriations. Less salary. Okay, I think only Romeo have the salary. Okay, and then we have enough space. Less interest on capital for Papa Romeo. Okay, and then add interest on drawings. Papa Romeo. And then we have profit available for distribution. And then we have share of profit for Papa and Romeo. Okay, I hope it is profit. I guess it would be. Okay. So let us go back to the amount of net profit, okay, being 164,200. Okay, 164,200. 164,200. Okay, and then salary. Okay, for 9 months. Okay, we have to be careful. 43200 will be for 1 year. So 1 month will be 32400. 324. Let me use red. 32400. Oops. I can write here 32400. Okay, interest on capital. Opening capital accounts of the two, 8%. Okay, so opening capital we can see here 85,000, 140,000. Okay, what happened? 85, and how many percent? Sorry, 8%. Yes. What happened to me? 85. 8%, but remember it is only for 9 months. So 5100. Okay, and Romeo 140,000, 8% for 9 months, 8400. To add it together, 13500 negative. Okay, next one is the interest on drawings. Okay, given to you, it would charge 12%. Okay, here 12% on total drawings. Okay, and then 2,000, 3,000 per month. Okay, for Papa and Romeo respectively. Okay, so here Papa 2,000, 9 months, 12%, 2160. Romeo 3,000, 9 months, 9 months. 5400 here. So 164200. Okay, it will give you 1,123,700. Okay, and they are dividing their profits equally, so it will be 61850. Okay. Next, we have the revaluation account. So, revaluation, we'll do it on the 31st of December, I think. Let us check. Yes, at 31st December, we'll do revaluation of the following. Let us calculate first. Land and buildings from 145 to 183, so there is an increase of 38,000. And then plant and equipment from 36,800 to 32,000, that would be a decrease of 4800. Okay, land and buildings, plant and equipment. So let us work on it. Year 2018. Okay, for revaluation, if there is an increase, it goes to the credit side as an income. Okay, gain, I should say, not an income. So 31st December, for the gain, you have land and buildings 48 30 is it 38,000? Okay, let me check later. 4,800 would be decrease. Okay, so there will be a loss. I mean, for the plant and machinery, plant and equipment. Okay, so 38,000, 4,800, you will have a gain of 33200 to be divided by 2. Okay, for the gain of each partner. So it will be going into the capital account of Papa and Romeo. Okay, 16600. Okay, next we have the capital account of Romeo, current account of Papa. Let us continue. We'll have to work from when to when. Prepare the accounts for the period ended. So it means that we will start from the 1st of April. That is year start. Okay, so capital account of Romeo, it is capital account is, and current account is also in the credit side, so addition in the credit side. Year 2018. Opening balance for Romeo is 140,000. As I remember, this is the opening balance, 1st of April. Okay, during the year there is only one change. Okay, that is the revaluation, 16600, 31st December, the revaluation account for revaluation gain. Okay, and then this balance would be brought to the next year. Okay, 156,600. Okay, 31st December balance 156,600 balance. Okay, 1st of January year 2019. Okay, next the current account of Papa. Let us see if Papa have a credit side balance or debit side balance. Papa, okay, both of them, both of them have credit side positive balance. So Papa 21275. 21275. Year 2018, 1st of January. Balance. Okay, do we have enough space? I wonder. Okay, so first of all, we have some additions due to because of the appropriation account. Appropriation account. Okay, what do we have? We have salary. We don't have salary for Papa. We have interest on capital. We have share of profit. Okay, and year 2018, 31st of December, we also have appropriation account. We also have interest on drawings. Okay, and we have drawings as well. Drawings is also deducted from the current account. Okay, so drawings, Papa, 2,000 multiplied by 9 months, so 18000. Okay, I don't remember the other figures, so I have to go back and look. Interest on capital for Papa 5100. Interest on drawings of Papa 2160, and then share of profit 61850. 61850, and then 5100 2160. Okay, then we calculate the closing balance. Okay, why do they not giving us enough space? Okay, 31st December balance carry down 21275 minus 2160 minus 18,000. That would give the balance of 68065. Okay, 68065. Balance carry down year 2019, 1st of January. Okay, so we finish question 3. Okay, so there is one area I am concerned with. I am really concerned. I don't know if you notice, okay, that I stop for a while when I'm calculating one figure. Okay, and you have to decide on your own. Here, interest on drawings. Okay, let us go back to Papa's calculation. Okay, Papa is taking 2,000 per month, and then for 9 months. So in total, 18,000 total drawings is taken for the 9 months. Okay, and then multiply by 12%. Okay, giving you that 2160. Okay, this figure here. Okay, but then only for 9 months. Okay, 12%. Do we need to multiply by 9 over 12? Okay, I wonder. Because you can see from the question, it sets interest of 12% per annum on total drawings. If it sets interest of 12% on total drawings, then I understand. Okay, but then per annum, we have taken for 9 months. Okay, and should we just multiply by 9 over 12? Okay, if I am not looking at the mark scheme, I would say I need to. Anyway, okay, you have to decide when you are working on the paper alone, okay, without any reference to the mark scheme. Okay, here I just find it very strange and worrying, okay, for this part. Okay, because for the interest on capital, yes, we apply 9/12, but then why don't we apply for the interest on drawings? Okay, and that's inconsistent for me. Okay, so we have finished 3 questions. We'll come back to deal with the remaining 2. Okay, let's take a break first. See you in 10 minutes. Okay, let's continue with the remaining two questions. Next, we have single entry, okay, or sole trader. Okay, this time I would prefer to say that it is single entry because we work on the statement of profit and loss. Okay, so let me change the details first. Single entry. Okay, so let's see. Calculate the total purchases and also the statement of profit and loss, sorry, and then some concept questions, discussion questions. So let's see. Purchases, okay, and then any other items that we need. So Mike is an accounts assistant for a firm of accountants. Lima, a client, does not keep full accounting records. The following information is available for the 2 years, year 2018-19. Okay, inventory and closing inventory to be calculated. Trade payables, other payables for wages, other receivables for rent expenditure, revenue given to you directly. And then rent paid. Okay, for rent paid, we need to adjust for other receivables. Okay, so rent paid plus 600 minus 7,750. So 8850 plus 600 minus 7, it will give you 8700 for rent. Payment to trade payables. Okay, and we are also given open and closing balance for trade payables. Let's see if other items related to trade payables. No, then we can calculate the amount of purchases as well. Trade payables minus opening balance plus closing balance. Okay, it is equal to 90400 minus 18,000 plus 15,000, 87400, and it will go to the answer here, 87400. 1 mark, so no calculation needed to be shown. Okay, so wages paid. Wages, okay, minus 410 plus 385. 18310 minus 410 plus 385. Okay, that will give you 18285. Okay, so if you are not familiar with the adjustment, let me show it to you. Okay, for me, I would do something like this. Payment, how to become the cost, okay, for example, purchases or the expenses, for example, rent and wages. Okay, we have opening balance, closing balance. Okay, if it is an accrual, we add accrual for closing balance and then the opposite for opening. Okay, if it is a prepayment, okay, opposite of accrual. Okay, so this is the quick way. If you have to think about it every time, then it costs you time. Okay, but then I can explain the accruals part. Okay, for payment, we need to add closing balance of accrual because okay, it is your expense, but then you haven't paid. That's why you have an accrual. Okay, should be paid, not yet paid, accrual. Okay, and it is closing balance. It means that it is your expenses of the current year to be paid next year, so you have to add back. Okay, for accruals, opening, you do the opposite because it is an expense for last year. Last year you should pay, but then you haven't paid. It will be paid in the current year, but then when you pay it, it is not an expense for the current year. That's why you have to minus. Okay, do negative. Okay, and the opposite for prepayment. Okay, so we're not going to explain it further. Okay, let's leave it here. Okay, so you have these three expenses. You have revenue, you have gross profit margin. That is, when you have gross profit margin, you can calculate the gross profit 14600 multiplied by 36%, you have gross profit of 52560. After you have this, okay, you will also have cost of sales. Okay, you have cost of sales, you have opening inventory, you have purchases, you can find closing. Okay, you are also given the profit for the year as a percentage of revenue. Okay, that means you have net profit. So again, 146,000 multiplied by 15%, you have 21900 net profit. Okay, so here you have net profit. Between net profit and gross profit, you have total expenses. Okay, and you are given two expenses, okay, rent and wages. Okay, if these two added together does not equal to the total expenses, that means you still have one other expense item here. We don't know what, so we can call it general expenses, okay, or admin expenses. Okay, doesn't matter. Okay, you just have to fill in the gap. Okay, so this is the data for part E, so we will skip it for now. Okay, let's start. You have revenue less cost of sales. Okay, we have opening inventory, add purchases, less closing inventory, okay, then you have gross profit, and less expenses. Okay, I guess there will be three. Okay, one for wages, one for rent, and then for other expenses, we call it general expenses. And then we have net profit. Okay, so let us start. Revenue, we have 146,000. Okay, and then net profit 21900, just as calculated before. 14600, gross profit 52560. 52560. Okay, with this you can calculate total expenses being 30660. You can also calculate cost of sales being 393440. Okay, so we will put purchases that we have calculated, 87400. Okay, opening inventory 12200. Okay, then with this cost of sales, opening inventory and purchases, you can calculate closing inventory. Okay, 6160. Okay, let us check. Yes. Okay, wages and rent. Wages 18285, rent 8700. Okay, so 18285, 18285, yes, rent. Okay, so with total expenses, you can calculate general expenses 3675. Okay, finish this 10 marks. Yes. Next, State 2 advantages of keeping full accounting records. Okay, first of all, with the use of trial balance, you can locate errors more easily. Okay, and then second thing, again, because of the availability of a trial balance, okay, you can have financial information ready for making decision. Okay, usually I would cite these two. Explain to Lima the implication of having unlimited liability. So for unlimited liability, if the business is not able to repay its liability, then Lima has to use her personal belongings for the payment or repayment of such liability. Okay, or simply for unlimited liability, okay, losses is not limited to the investment made to the business. Okay, so Yankee, another client, is considering purchasing a delivery vehicle. He will need to take out loan to purchase the delivery vehicle. He believes that he will be able to meet the monthly loan repayments. Evaluate whether Yankee is correct or not. Okay, so let us see what is available to us. Okay, for these 2 years, okay, be careful. This is the old year, I mean the previous year. This is the current year. Okay, so profit 16, 18, current ratio 2.1 to 1.7, 1.2, quick ratio 1.2 to 1.1. Okay, so apart from the profit for the year is the percentage of revenue, okay, the other two ratios both decrease. Okay, so 5 points. I would say, okay, because the focus is on liquidity, whether whether Yankee is able to repay liabilities when it falls due. Okay, so we should focus more on the current ratio and quick ratio. Okay, I would say both ratio, current ratio, quick ratio, okay, both decrease. Okay, so that means liquidity worsen. Okay, for both ratio, it is still in the safe. I would say it is still safe. Okay, 1.7 to 1 and 1.1 to 1. Okay, it is still safe. Okay, for usual operations. Okay, but if we are talking about a repayment, okay, especially if it is a large amount of repayment, then I should worry about it. Okay, because it is safe for operations only. For usual operations. okay, but if you have to take another part, okay, for repayment and interest, okay, it will be varying. And also there's an increase of profitability from 16 to 18, okay, it is good. And then this increase may help you finance the interest payment, the interest expense and payment. Okay, so for me, it is quite risky. Okay, I do not think he would be able to meet the monthly loan repayments because you have to pay monthly, okay, and we do not know how much the amount, okay, but I would say from the figures that we have, it is not very I mean, Yankee is not very capable of making such repayments unless, okay, with the new delivery vehicle, okay, there will be a significant increase in the cash flows, okay, as well as in the sales of the business. Okay, so 5 months. So last question we will have statement of cash flows. Okay, you can see dividend received, okay, long-term investment, some explanatory questions, and then work on the statement of cash flows, okay, and then 5 marks, okay, for some other evaluation questions. Okay, that would be quite long. How many marks do we have for this question? 21. Okay, so let's write it first. Statement of cash flows. Okay, so state, okay, where in the statement of cash flows the following will be shown. These we do not see interest received or dividend received yet, okay, in any other papers, okay, but it appears here. Okay, hopefully it won't go into your I mean, I don't know, okay, whether you will see it here, possible, okay, but then for dividend received, because it is from your investment to other companies, so it will go into your investing activities. Okay, yeah, activities, and it is positive. Okay, purchase of long-term investment. Okay, again, it will go into your investing activities because short-term investment will go to cash and cash equivalent. Okay, but then long-term investment like buying the shares of others, okay, for dividend income, okay, or buying the debentures of others, then it will be your investing activities. Calculate the amount received from the right issue, okay, and then the statement of cash flows. Okay, so let us begin. Let us look at what is given to us. Netic Limited provide the following information. These are opening balances. Are we given closing balances as well? Yes. Okay, why didn't they put it in one table? Why? Okay, so we have, can we copy it? Okay, we will transfer these items, okay, to the first page as well. Okay, so bank loan as at year end 35,000. 35,000. Oh, let me write it better. Year 2018, year 2019. Okay, 35,000. Okay, and then let me open it in another area so that I can see it properly. It is so stupid to do it like this. Okay, year 2019 and June's paper, resource booklet. Okay, So you can look at it in your own paper. Oh, why it disappear? Okay, not good. I only have 3. Sorry, please spare me a moment to make it right. Question 5. And then question 4. Copy. Paste. Okay, sorry. So bank loan will be 35,000. Okay, and then bank balance 3. This is according to the next page. Okay, credit, that means it is negative. Cash 100. Land and buildings 640,000. Accumulated depreciation 86000. Machinery 199,700. 108,200. It is really stupid for them to do it, to separate it into 2 tables. Okay, revaluation reserve, it becomes 120,000. Okay, and then nothing else. Okay, let you see. Okay, all the figures are copied. Okay, all the figures are copied to the first page so that we don't need the second page. Okay, maybe they don't want to show the closing balance for the share capital, but then you can simply write to be calculated, right? Okay, why separate into 2 tables? Okay, very stupid thing to do. Okay, so we have these transactions. Okay, so 1st of September, bonus issue, 1 ordinary shares for every 5 ordinary shares held was made. The directors decided to leave the reserves in the most flexible form. Okay, so one for every 5. Okay, we use red for the markings. So we have 260 now. Okay, divided by 5. Okay, it will cost you 52000. Okay, where are they going to take the amount? Okay, of course, share premium. And when there's enough, we just take it from share premium. If there's not enough share premium, then we take it from retained earnings. So next, 30th September, machinery costing 19300, accumulated depreciation. This amount was sold for a loss. Okay, again we will write that working here. Okay, so it is a loss of 2335. Okay, and the cost being 19300, accumulated depreciation 7165. We have been showing a lot of this working, so I am not going to write the words anymore, okay, to save some time, because when you are working on it, you will not show those words. Okay, so you have carrying value of 12135, and then proceeds will be 9,800. Okay, let me check it again. 13906171165, and then 9800252335. Yes, correct. Okay, so this will go into your investing activities positive as a receipt. Okay, this operating activities positive. Okay, and then these two will go into the workings for the machinery. Okay, so machinery, let us zoom in a little bit. Okay, minus 19300 minus 617165. So it will also give you the purchases as well as the accumulated depreciation. 182400 minus 193,199,700. It will give you 36600 for purchases. Okay, how about depreciation? 65 minus 108,200, 5965. Okay, so this one, purchases will go into your investing activities negative, and then depreciation go into your operating activities positive. Okay, so first two done. Dividend of 43860 was paid, okay, given directly to you. You don't need to calculate anything. Okay, so financing activities negative. Right issue of 2 ordinary shares for every 5 ordinary shares issued, made at 0.8. The right issue was fully subscribed. Okay, so we need to calculate how many shares we have as at this moment. Okay, 260,000 plus 52,000, we have $312,000. Okay, but then it is number of shares. Okay, then we need to take into account the par value for each shares. So the number of shares is equal to 624,000. Okay, multiplied by 2/5. The new issue, 2/5. The new issue is equal to number of shares. Okay, 249,600. Okay, and then with this 249,600, you have to calculate 0.8 each. Okay, that will give you 199,680. Financing activities positive, and this 199,860 is, you are being asked in the first part. Okay, 2 marks. Okay, so 199,680. Okay, 2 marks, so it's better for you to show the workings as well, but I'm not going to show it again here. Okay, we have it in the first page already. Okay, so you do not need to calculate the increase in share premium because you have the financing activities cash inflow already for the issue of shares, so you can save some time on that. Land was revalued, and land is not depreciated. Okay, land. Here, okay, here, there were no other disposals of non-current assets. Okay, that means, okay, here, the difference is the depreciation of buildings, while here, the difference is the revalue of asset. So from 5, do we have Okay, no, not really. Okay, we have to look at one thing. Okay, that is revaluation reserve. From 40,000 to 120,000, there is an 80,000 increase. We have to confirm if the increase in land and buildings cost, okay, is this amount, or is there any other purchases. Okay, so here we can see that after we add 80,000 of revaluation, we still have 40,000 left. Okay, and that would be the purchases, okay, or additions of buildings. Okay, so here, investing activities, negative. Okay, next part. Let me calculate one more time. At 80, at 40, yes. Okay, accumulated depreciation for land and buildings, we still need to calculate. So from 67600 to 86,000, you have to add back 18400, and that is your depreciation of land and buildings, okay, land is not depreciated. Okay, so we have finished everything, but then let's see, net cash used in operating activities was 55530. So we don't need to show the part for operating activities, and we do not have the increase or decrease in the working capital, inventory, trade receivable, and other trade payables. Okay, so we start with this figure 55530 negative. Okay, let's start. Cash, net cash used in operating activities. Okay, this would be 55530. Okay, so next part, cash flows from investing activities. Okay, so we have N, proceeds from sale of machinery. Okay, and then we have acquisition of buildings, and also acquisition of machinery. Okay, we have calculated these three already, so let's see. Um, 9,800 for proceeds, and for land and for machinery it is 36600. Okay, so 9800 6600 negative, and buildings it is 40,000. Okay, so minus 40,000 minus 366. Okay, we have 66800 negative. Net cash used in Okay, next one, financing, cash flows. We have dividends paid. We have right issue. Okay, and we still have some items that we haven't touched. Okay, that is the bank loan. Okay, from 80,000 to 35,000. Okay, we have repaid 45,000 and it will go into the financing activities negative repayment of bank loan. Okay, and the balance, we can also calculate the balance. Okay, the two added together, 6,240 plus 1,200, 7,440, and the closing balance is negative 3,990 plus 100. Okay, that is 3,890 negative. So from positive to negative, there is a decrease of 1,1330. Okay, so let us put in the final figures. Less repayment of bank loan 45,000, right issue how much? Right issue 199680, and then dividend paid 43680. Okay, so it is 43680 negative, and then 199680 positive for issue of shares. Okay, finally we have an inflow of cash $111,000 positive. So we have net cash from financing activities. And then added together, okay, we have 11330. Is it? Yes. Okay, good. 11330. I thought we do not get the answer that we want. 11330 negative. So it is a net decrease in cash and cash equivalent. Okay, so opening and closing balance. Okay, let us write it first. Cash. Okay, so we have already calculated. It will be 7,440 and then 3,980 negative. Okay, 7,440 and then 3,890 negative. Let us calculate again. 1,1330 negative plus 7,440. Yes, correct. Okay, so we finish these 10 marks, 12 marks. Okay, so the remaining parts, okay, only one part left. So this is part C. Part D. Okay. Discuss whether the directors were correct in making a share issue rather than increasing the bank loan. Okay, is it correct to do that? Okay, let us look at the information given to you as well. Okay, before we comment on that, let us look back at the statement of cash flows. Okay, we do not usually see such a situation. That is, from operating activities, we have a large negative items. Okay, that is very worrying because usually, okay, the operating activities should have a positive cash flows. It is from your operations. If your operations do not give you money, do not give you cash, then what else? Okay, negative cash flow on investing is normal. Okay, if you have a positive cash flow, you have to worry. Okay, because you are making negative investment. Okay, financing can be positive, can be negative. It depends on whether the business need money or not. Okay, if it needs money, okay, then it should issue some shares, borrow some money, then it will be positive. Okay, if it is not, if it has enough cash in hand, okay, it will repay some of the liabilities, and of course they will pay dividend, then it would be normal for you to be having a negative cash flow in the financing activities. Okay, so here the question asks you, they have a right issue and it is almost 200,000. Okay, and with this you also repay some of the bank loan. So is it okay to do it like this? Okay, is it possible to do it another way, that is you borrow more money and then have less issue of shares? Okay, possible. Okay, but then is it good? Okay, so for me, okay, one thing that we should mention is, okay, you have a large negative cash flows in operating activities. Okay, you also have a large negative, okay, why is it negative cash and cash equivalent? So the question is, will the bank lend you more money? Okay, it is not that you do not want to borrow, it is that you cannot borrow from the bank with good terms. Okay, will they charge you higher interest? Okay, if that is the case, because you are not working well, they have to control that risk as well, okay, by charging you higher interest. Okay, if that is so, you will have to bear much interest expense in the future. Okay, so by issuing shares, okay, you avoid the problems above. Okay, you might not be making good profits now because we can see that you have a negative operating cash flows. Okay, so it might be how you are going to do it. Okay, you have no choice. Okay, that is what I see here. And of course you have to, you can support borrowing from the bank as well. Okay, by saying that, by doing this, okay, you can do it temporary. Okay, you do not have to worry about a higher level of more number of shareholders, more number uh, of shares, okay, and that will require you more payment of dividends in the future. You can also say it like this, okay, possible. Okay, evaluation questions, you can stand in both sides, I mean either side. Okay, and you do not have to have the dilution of share of more people are holding shares. Okay, so these shares can be sold somewhere else, so someone can just buy you out. Okay, it is also possible, you can say that, but it is good because it is a right issue, it is a bonus issue. Is there a bonus issue as well? No, no, I think just a right issue. Okay, if it is a public issue, then okay, you will have a loss in the ownership as well, a reduction in ownership percentage as well. Okay, and you can also mention that. Okay, so 21 marks for the whole question 5. Okay, so we finished the 9th question, 9th sets of questions. Okay, and I will go on a vacation. Okay, so I'll meet you in August. Okay, hopefully on the 2nd of August or 3rd of August. Okay, meanwhile, please, okay, try to work on papers on your own. Okay, see if you can handle them by yourself. Okay, also go through the previous videos, okay, for the questions that we have finished. Okay, hard work's always paid off. Okay, everybody, let's go.